Newsday continues here on One News Now. I'm Danny Laurel. The controversial Maharlika Investment Fund now has a counterpart bill filed in the Senate. Senate Committee on Banks, Financial Institutions and Currencies Mark Villar filed the counterpart measure in the Senate last week. In a radio interview, Senate President Mig Zubiri said he is hoping that Villar would call for a committee hearing right away so that they can discuss the direction of the proposal. Meanwhile, House Speaker Martin Romualdez has defended the soft launch of the MIF at the World Economic Forum. Romualdez, the principal author of the MIF bill, insists that the launch was not premature. Recall that the bill was swiftly passed in the lower house after being certified as urgent by the president. It recently underwent revisions, with House lawmakers scrapping dividends from the central bank and state-run banks as funding sources.
The Filipinos cannot wait. We have to bring down the cost of electricity, the cost of power, the cost of oil. We have to bring in developmental projects, not just infrastructure, but we have to bring agricultural projects in. We have to make sure that there's food security.
Now, President Bongbong Marcos still is not keen on outrightly banning POGOs in the country. Speaking to reporters in Davos, President Marcos said that it would be better to examine first the social costs of POGOs as well as its contribution to the state's revenue. He did say, though, that he is open to discussing regulations with China, which has been pushing for a crackdown on POGOs. Offshore gaming operations in the Philippines have been linked to a series of illegal activities, including money laundering, tax evasion, kidnapping, and prostitution.
What would be the point? It's not a huge part of our economy, and if it's adjudged that there is a social cost, it might not be worth it. All of these things we should be continuously examining to see if it still continues to be a good idea for the Philippines.
The wheels are turning for the Maharlika Fund, and will that spur interest into Philippine equities? Here to weigh in, we have with us Japheth Tantiaco of PhilStocks. Hi, Japheth. Good morning.
Good morning, Ma'am Danny. Thank you very much for inviting me.
Okay, let's kick off with this Maharlika Fund. No, is this good for Philippine equities in general because we might be attracting more liquidity from offshore, or will that sap away the liquidity that we are seeing in the local bourse?
Well, we see the Maharlika Fund as something that can affect the local economy's performance, which in turn has a say on how the equity markets will work. That's how we view the Maharlika Fund. On the positive note, yes, it could result into investments, which in turn would prop up the local economy. However, on the other side, we also have to take note that currently we are in a tight fiscal position.
Okay.
We are in a tight fiscal position. Our debt to GDP ratio is still above the favorable levels. So it's more of the timing, actually.
Okay.
That's our main concern with the Maharlika Fund. As economists say, it would be best if this was done at a time wherein we are running a budget surplus rather than a budget deficit. So these are our considerations. Yes, it can help the local economy, but take note that with moves like these, the returns will be in the long run. And right now we're dealing with this fiscal positioning problem. So these are the concerns that we are weighing right now with respect to the fund and how it could affect the local economy.
All right. You have the president of the bourse, no, even Ramon Monzon, saying that this might actually be good in terms of interest in our equities. Are there any stocks that you see might be benefiting from this, at least if it does push through?
Well, if it does push through, one of its targets is infrastructure. So stocks that are playing in the infrastructure front, could benefit from this.
Okay, very interesting to be watching out for that. Now, speaking of, well, not necessarily infrastructure, but the property space, no? You've got President BBM saying he is not keen on outrightly banning POGOs, at least not right now, until they have looked into it more deeply. What do you make of that language? Is it too early to be betting back on the POGO industry resurgence? How stable is the sector?
Well, with respect to President Marcos' statement, it provides hope. It provides hope to the property sector, which has a lot of exposure
Okay.
with the POGO sector. I mean, it somehow extends their lifeline. It it somehow boosts their prospects, given that for now President Marcos seems lax with respect to the POGO sector. So we can say that the POGO sector, at least in the near to medium term, is still going to be, it's still going to be playing within within the Philippine arena, and this in turn is going to continue providing support to the financial performance of the property companies who are exposed to the subsegment. However, there is still the part of uncertainty. We don't know yet with finality if POGOs will be here to stay in the long run, or will it be tightly regulated, or will it be completely banned from the country? So this is the uncertainty. So the President Marcos' statement, it provides hope, but at the same time there is still uncertainty.
But Chefet, what is your view on the property space in general? No, you've got BSP Governor Medalla saying that probably the tightening is going to stop at 6% by the first quarter of the year. But tell us, are you seeing signs that things are going back to normal? The vacancy rates are going lower when it comes to the commercial properties. The trends in e-commerce, etc. People are going back to the malls. And even with these high interest rates, people are still buying houses. Tell us more about your view on this sector.
With respect to the property sector, overall, we're still bullish with the sector. However, we also have to take note of which subsegments are the companies heavily into. For now, if we're going to talk about the property sector, well, on a macroeconomic level, first, the economy is recovering. There are a lot of disposable incomes within the economy, a lot of disposable income circulating within the economy. If you're going to see the labor market right now, it's tight.
Okay.
Given that, it gives this prospect that demand in the property sector will still be strong. However, on the negative side, as we all know, interest rates are rising, which in turn is negative to the property front. So with that, we have the upside and we have the downside. So now what we have to look into is which subsegments are the property companies heavily leaning on. In this kind of environment, we're more into those who are into the malling segment. As mentioned a while ago, we have huge disposable incomes in the economy right now. So shopping is going to go back. A lot of people are going to go malling. And this in turn is going to boost mall revenues. At the same time, the economy is reopening. And given the reopening, we expect that there will be a lot of people there will be a lot of businesses who will demand employees to go back to offices. So office space is also expected to boom amid the environment. The most that will take a hit will be the residentials, given the rising interest rates. So overall, property sector is still bullish, but with respect to the tiering, we're more into the malling, and then next into the office space, and then finally the residentials.
Okay, very interesting insights there. Now on to the index. How much further can we go into this bull run, or is it already overbought? Even not just the Philippines, but the MSCI Asia Pacific up 23% since end of October, up by 7%. How much more catch up is there still and upside?
Well, if you're going to look at the fundamentals of the market, marketability-wise, it's still undervalued. So
Okay.
we still see some space for a bull run for the market. If you're going to look at its current price to earnings ratio, it's at 15.50 times. So this is below its last 5 years average of about 19 times, or a little more than 19 times. So we're still below historical P average. So that's one. With respect to the local economy's prospects, yes, there are challenges, from high interest rates to high inflation to external headwinds. But so far, the prospect is, despite these challenges, the local economy will still continue to grow, most likely at a slower pace than what we're going to see in 2022. But nonetheless, economic performance is still expected to be robust this 2023. And with a strong economic performance, it's going to translate into a strong corporate performance. So that's for the fundamental side. For the technical side, if you're going to look at the chart, we just had a golden cross. Its 50-day exponential moving average has already crossed above its 200-day counterpart, and this is a bullish signal implying a possible rally in the medium to long run. So overall, we are optimistic with the market. However, going back to the charts, right now the local market is testing its resistance range at the 7,000 to 7,100 range. So this is a point of concern.
Okay.
If the market will be able to get past this range, this resistance range, then it will add to we see this as an addition to the bullish signals of the market. However, if not, then in the short term, perhaps we're going to see a consolidation, with the support at 6.8 and the resistance at the said range, 7,000 to 7,000.
Okay,
But overall, we're cautiously optimistic.
Year-end target, have you revised that?
We don't have a year-end target yet for the bourse. We are still doing our forecast. However,
Okay.
in the near term, if ever the market does get past the 7,000 to 7,100 range, the next target that we are seeing is 7.3. And if it also gets past 7.3, then the next will be at around 7.5.
Okay, and finally, before we let you go, a stock pick for our viewers here, Jafet?
Okay, for a stock pick, well, with respect to the local economy right now, as mentioned, it's going to continue growing. It's still expected to have a robust performance. And with that, we're still expecting strong energy demand this year.
Okay.
So still expecting strong energy demand. However, on the supply side, things are still tight. Given that, we still expect energy producers to enjoy high selling prices. So the energy sector is one of the sectors that we are looking into right now. And if we're going to zoom in, the stock that we're really looking into is Boytis Power Corporation. Given the bright prospects, in its industry, plus its commitment to continue expanding, as well as its venture into the renewable energy sector in order to increase the share of the renewable energy in its portfolio. So that's the stock that we recommend right now.
All right, so stock to watch, Aboitiz Power trading up by 0.9%, second best performer in the first few minutes of trade. Thank you so much for those insights, Jafet Antianco of PhilStocks.
You're very much welcome.
Now, for more updates, visit News 5, the Philippine Star, and Business World online, or visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com, and stream One News 5 anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.